Well, Stephen Gallo is head of market analysis at Schneider Foreign Exchange. Bloomberg data shows his currency calls have performed the best over the past 6 quarters, and he joins me now. Steve, congratulations on that title. In terms of what you do now on the Swiss franc, I mean, it looks like it. You know, despite everything the central bank is trying to do to weaken it, it weakens a touch and then goes back up. Is it going to continue going up?
Okay, well, so far what they've been doing has been very extreme. I mean, the amount of Swiss franc liquidity that they have pumped into the foreign exchange markets has been enormous. Yeah. And so it is doing something. It has had a significant weakening impact on the
7-day trading session.
Exactly, yeah, so on about a week's time. But you know, the important thing to point out is the global environment is so much more uncertain now even than it was 6 months ago. And 6 months ago it was very uncertain. And we are actually in an environment where market participants and investors would be willing to accept things like negative nominal interest rates, which is what essentially Switzerland has now, for the safety of some kind of a currency or some kind of a vehicle, because the franc is to a degree still a safe haven. I would say that overall the tides are starting to shift, but I do foresee potentially bouts of franc instability, so bouts of franc strength that just, you know, are to a degree uncontrollable. However, I do think we're getting to a point where we're more looking at selling the rallies in the franc rather than just continuing to buy it.
But so how much, you know, how much does the central bank still have ammunition left to do something? Because they floated the idea of actually pegging it to the euro.
Right.
Now, why haven't they done that? And is it really a feasible option for a couple of months? Or do we really need some kind of concerted central bank action? Because this is the only way to get things done properly.
I think pegging to the euro is the last thing that both the politicians in Switzerland and the Swiss National Bank want to do. I think it's the very last thing that they want to do. I wouldn't completely rule it out at some point, but the best time to peg the franc to the euro is when the euro area sovereign debt crisis has moved to a lower notch of intensity, so a less intense situation for the euro area as a whole.
Which would be what, 5, 6 months? We don't know at all.
It could be any time. It could be when the risk of a systemic banking crisis in the euro area are off the radar screen. We're not there yet. It could be once we get to a more robust institutional framework, you know, relative to the EFSF and the ECB and how that is all going to play out. So that would probably be the better time to peg the euro to the Swiss franc. You also have to remember, you know, what are the repercussions of pegging to the Swiss franc? Well, there are political ones, but aside from that, I mean, what does the SNB do with all of these euros it's accumulating? If the euro is still in jeopardy, it's going to have to be buying those euros and selling francs and then dumping the euros onto the market in other places. Number one, that won't make the ECB happy, because I'm sure if they're selling euros and buying dollars or selling euros and buying Aussie, you know, the ECB are not necessarily going to be happy with all those euros being dumped onto the market. Also, across the FX markets, across the entire spectrum, it will create distortions because the SNB will be having to buy other currencies as it unloads those euros from its holdings.
Now, Steve, what about the yen? Because we've again seen intervention there. Again, a little bit of doubt maybe that this has worked to the full extent that actually the central bank was hoping it would.
Yes.
Can they do other things? Or again, do we just need a concerted G7?
Well, coordinated is probably not going to be much help either. I mean, they can try. The yen is in a structural uptrend. I mean, that is confirmed now. I thought it was the case when we were in the 80 to 85 range in dollar yen, and now that we're in the 75 to 80 range, I think it's confirmed. I think they're going to be continuing to fight against a rising yen for a very, you know, for a significant period of time. Japan is not exporting the degree of capital that it was in previous decades, and the Japanese are drawing down on their high savings, and that means essentially that they're putting less money abroad, and the yen is in an uptrend. That is one of the reasons why it's in an uptrend, I think.
Now, Steve, we're running out of time, but in 30 seconds, what would be your top pick for currency? I know in the past you've looked at Canadian dollar. No?
At the moment, I'm largely on the sidelines. I mean, you know, even the Australian dollar, which I think is fundamentally a more robust currency than most, I'm still watching China very closely at the moment. It's very uncertain how rapidly China is going to slow. But I would say that there are opportunities to be buying the Australian dollar on significant dip. So if we dip into the 95 to parity range against the US dollar, I think those are good buying opportunities. There are good buying opportunities out there for a lot of currencies, I think.
What, the emerging markets?
We just have to get to certain levels.
So give me three: Aussie dollar and then a couple of...
I like the idea of the Korean won. I have liked that.
Okay.
I mean, I do think that there is possibly that we will get more tightening in South Korea, but again, a lot of that is going to be dependent on what happens in China. I mean, more tightening certainly over the medium term, more growth over the medium term, but we're slowing down in the short term, and that is a risk that we need to watch. There still seems to be some weakness in the emerging market currencies vis-a-vis the dollar when we get negative economic data and when global uncertainty increases, and that is important as well.
And that's what we have to watch out for.
We have to watch out for that.
Steve, thank you so much. Pleasure to speak to you and have you in the studio. Stephen Gallo there.